Welcome back to another episode of the Makers Podcast. My guest on today's episode is AC, founder of Dozens, the new fintech company which aims to become the new home for your money. Now, just before we dive into today's episode, AC has very kindly agreed to come and do a talk for us on October the 1st, taking place in London. Now, if you'd like to attend the event, head over to makersseed.com, head over to the events page, and for a 30% discount, enter code PODCAST. We would love to see you there. Now, let's dive into today's episode. So, welcome to another episode of the Makers Podcast. Today, I'm joined by AC, founder of Dozens. AC, how's it going?
Very cool. Thank you for coming in.
Thank
Hi, everyone.
You. No worries. So, let's start off. What did you have for breakfast this morning?
I skipped breakfast. Probably not the best answer. But then I proceeded to get a pretty big lunch, so I think I made up for it.
Nice. And what is the one thing you wish you did differently before you turned 20?
Ooh, that's a long time back. Not much. I think I grew up in India, so to keep the answer real, it's not like when you grow up in India, the kind of education system that you have back there, that you have a lot of options to go through it. It's a really competitive space. So to shine through, you need to actually go through the steps. So in the period of 16 to 20, 21, I don't think I could have done much differently because you need to shine through a billion people.
Where in India were you born?
I was born in Calcutta, and I grew up in Delhi.
Wow.
And Calcutta is kind of the more intellectual bit, and Delhi is the sort of get shit done kind of place. Yeah, it's really ambitious, entrepreneurial. So hopefully I got the right end of both those things, because otherwise it would be really bad.
Awesome. And what is your favorite company right now, apart from Dozens?
I think it's probably still got to be Amazon. It was Apple for a very long time, from the time I was 15, 16, and Apple was actually nowhere in the picture. Actually, even earlier, when I was 10 or 11, I think I wrote an essay about how I wanted to be the CFO of Apple, which is really crazy now, thinking back at it. Because I love the fact that they were the underdog and only some people knew about how good they were. And then Steve Jobs left around that time and then made the comeback, so it was really big and inspiring for me. I don't quite like them as much anymore, because I think they've kind of lost the point on simplicity. But Amazon, except for the stories you hear about how some of their delivery drivers or people in their warehouses are treated, the fact that Jeff Bezos has kept customer experience central and taken so many risks along the way to sort of get that mission alive, and how well they've done as a company and him as an individual is quite something.
Have you met Jeff Bezos yet?
Not at all.
Not yet?
Nowhere close.
Not yet. So for our audience who don't know anything about you, could you just summarize your career today in a minute?
Yeah, sure. So, as I said, I grew up in India. I went to a school where it's pretty hard to get in. You need to be sort of 0.5% of those who apply. So what ends up happening is the banks go to these schools in India to pick people up. So I got picked up for a M&A role, mergers and acquisitions role in London. So that's how I started as an investment banker. Then I went to New York to do some capital markets and trading. And around the time my MD in New York started selling his Lehman shares, I was working for HSBC, so I knew HSBC's investment bank in New York was probably not the best place to ride out the crisis. So I wanted to come back to London. I was lucky enough to actually come back to HSBC's principal M&A team. So rather than advising governments and large corporates, this team bought and sold banks for HSBC Group. And because it was the crisis, every Friday afternoon, every bank you can think of would call HSBC and go, hey, do you want to have a look at us over the weekend? And so that was a really interesting couple of years. Around the same time, I did my master's at LBS. So I was writing some stuff on bank returns and stuff. So I got really into how banks work. And a lot of it has gone into sort of Dozens now. But the more interesting bit was the board asked so what do you do if you don't buy something? And it wasn't that easy to answer because HSBC had grown quite a bit by acquisition. And I realized how difficult it is to actually run a bank as opposed to sort of growing by acquisition. So that got me interested in organic strategy within a bank. I moved to HSBC's private bank where we did a lot of cleanup stuff and eventually to digital. The last 3 or 4 years within HSBC I was doing sort of robo-advised structured products, FX products. And that got me pretty close to the space we're in right now. And meanwhile, Monzo and Starling and Revolut were making a go at it. So around September 2017, I decided it might be a good time for me to try stuff and got lucky and got the funding, and we've been at it for 18 months or so since then. Most of the team only came together around April or May, so it's been less than a year of build. But I've been on it actively for 18 months.
So you originally launched Project Imagine. What was the idea behind that?
Project Imagine is kind of quite the aspirational, lofty brand. Like, I would love it if in 3 to 5 years, people like me back in the day who have really a lot of ideas when they're in college or in uni thinking about financial stuff, if they didn't know where else to go, they'd go like, okay, let me go talk to Project Imagine and see what they think about this idea. So it's kind of almost like a incubation space where we can take an active stake and interest in ideas that solve financial problems. And Dozens is kind of the first bit of it where we are actively making that brand and that proposition from within the team at Project Imagine. So it's kind of, right now, it's almost one and the same, but in the future, Project Imagine could do a lot more Dozens-like stuff.
So out of that, you came out with the idea of Dozens. What is Dozens and why Dozens?
Dozens is for the masses, for the dozens, for the faceless many. So I think, during that time that I described when I was sort of looking at how products are manufactured in banks, you realize that the one fundamental flaw in banking is, from a consumer perspective, is that banks only make money when people borrow. And I don't think borrowing itself is bad because, for example, you need to borrow to buy a house. That's kind of completely okay. But when you borrow to go on holiday, or when you give students debt in the form of free overdrafts that suddenly become priced overnight, as soon as they leave college, I think that sort of borrowing really stymies people's growth. And the fact that banks depend so much on individual borrowing as opposed to like an entrepreneur looking for a loan to grow their business. It's almost easier to borrow for your holiday next month than for you to borrow for your business to grow. And that sort of stuff really bothers me. So Dozens was an idea to come in for individuals to save, which is where we've started with the app, and in the long run help businesses grow, which then helps employment, therefore helps individuals to save again, and that cycle of money is where Dozens needs to fit in. And
can you tell us more about your interest rates and your fixed rates?
You mean in terms of the products we have right now?
Yeah.
So we are not a bank. We have an e-money license and an investment license, so a combination of 2 licenses from the FCA. And we use those licenses to create the products across the spender to saver to investor journey. So you get a current account and a debit card and you get no interest on it because it's e-money. Then you can move your money to cash savings by like IFTTT rules, like save for a sunny holiday when it rains in London, so something completely non-finance related as a trigger. Or you could use roundups, for example, all of the stuff that exists that we've just kind of packaged into one nice app. And once you create your savings, you can then decide to either go through the risk assessment to see if you want to take risk and go into investments, or we've created one simple product for people who don't like investing to give you some reward for this act of saving. We've got a 5% per annum fixed interest bond, and that's actually a loss-leading product for us. It's not like we then invest your money somewhere else. We take the £100, which is the minimum that you need to put into it, plus the £5, which is the 5%, and put the £105 into a trust account that we can't touch to pay salaries and stuff again. So it becomes your money with our interest, really safe and secure in a trust. And we needed to do it as a bond product because we're not a bank. So using our investment license, that's the best we could do. But we also stand behind the bond. So if you ever wanted to come back and get your £100 back, because the interest is paid monthly, then we would just buy the bond off you for the same £100. So effectively, you are secure from market movements and counterparty risk. And in the future, when we're a bank, hopefully we can just make that into more of an easy access savings kind of product. But right now, it needs to stay in the form of a bond.
And why 5%, not the 1.5% or 2% like the other fintechs do?
So that you can ask me this question. Because I suspect if we went with 1.5, it wouldn't become a talking point. So we wanted to do something that would make people save. 5, there's an entire generation now that doesn't remember that in 2007, the US risk-free interest rate was around 5%. It's just sort of all has come crashing down and never gone back up again, and probably will not get to those levels for some time. But, that was a different world altogether and wasn't so far back. And I think if you pay someone 0.25 or 0.5 or even 1.5, as long as it's below the inflation rate, their money is worth less tomorrow than it is today. And when it comes to small savers who are incapable of taking investment risk, to get that higher return, there needs to be some products to get them to save, because that's what will make us better as a society almost, right?
Interesting. And so that 5%, do your banks work with you? How do you make money from that?
We don't. We just
Not at
give
all.
out the 5%. We need to make money from the rest of the platform. So we make money from interchange. We make money when you remit money overseas. So we don't make money on FX as in the sense when you use the card internationally. But we do make money when you send money to the US, or we've got a ton of features in the app. Then we make money when you invest with us and through custody fees. So there's a lot of stuff built in, which, like, for example, wealth managers or robo-advisors would only make money when you keep money with them. Or spending cards would only make money when you spend with them. So because we're such a broad scope that's already gone live, we make money just like those other guys through all those activities. And we take a tiny portion of it, well, hopefully in time as we make lots of money, we take a tiny portion of it to reward the behavior that is our mission, which is to help people save.
And you're currently raising £3.5 million on Seedrs. How's it going so far?
It's gone pretty okay. So we're like on day 3 of the sort of public launch, and I think we're at around 3.3 or 3.4 right now. So it's almost 95% done, and we're going to be out there for another 3 weeks or so. It's gone fine.
And how many users do you have right now?
So we've been live for 8 weeks or so at this point, and we've had around 10,000 downloads, which is much more than we were expecting, and around 4,000 KYC completed. We've sent out around 2,500 cards at this stage, and we're opening new accounts at the rate of 100 to 200 per day. So it's gone really well. As I was telling someone the other day, like, we opened the doors and there was like a lot of people outside, and then there's more people now. So I guess it's what you would call kind of a product market fit moment. So our ability to produce cards right now is slower than the number of people that we're attracting every day, which is an operational problem, but is a really good problem from a investment thesis or a kind of creating a company point of view.
Did you see much disinterest? Did you think there was going to be this much interest when you launched?
No, because I'm not a cynic, because I am an entrepreneur, but I'm a kind of prudent business case maker. So I would have thought that we would get to 5,000 somewhere around the end of the year, maybe sort of autumn time, but I think we're likely to get to 5,000 users next month, or even late March. So, it's definitely been fast. And I think there's something about the way we have told the story that has resonated with people. So, we have this map of our first 1,000 users, and it's not central London, and it's not Shoreditch, and it's not London even. It's actually all across the UK, all 4 countries. And that really gives me more joy than like getting to maybe even 1 million users, because it means we've got a beginnings of a really inclusive brand.
And how do you build that tone of voice of the brand? So I know you've got a really interesting community, like some of the other fintechs out there. Is building that community the key part of a success, maybe like Dozens?
I think it's actually more than that. So interestingly, my first 2 hires were in the brand space, and they didn't even know why, because they're like, well, you haven't built anything, and what do you want us to like talk about? But the thing is, for them to, obviously people who are good at brands are not bankers, right? So they don't understand banking or financial products, and we're in a very regulated space. So for them to completely internalize the story, the regulations, the constraints, and then still have plain speak as a, no fine print and like all these principles as communicating pillars takes a long time. And I think because we invested in that so early, it shows through in all of our comms right now. So I think we, even if I kind of observe so myself, I think we punch above our weight when it comes to the impact of the ads that we put out. And that's largely down to the internal creative team.
And next year, will you look to potentially do another fundraising round, or?
Yeah, I mean, we're a growing startup, so we'll always need money. And we're up against either like high street banks who've been around for centuries almost, or some really well-funded fintech startups. So for us to stay relevant, even just to support the operational cost of growth, we'll definitely need money.
But what's quite interesting is you decided to go to Seedrs to get the community involved. You didn't go straight to VCs or take angel money.
No, Why? we did. So I raised like money before I even recruited a single person. So before we had product or team or traction, certainly. there was money, and we've got plenty of institutional money. Seedrs is actually as much about the inclusion message. So we've got a minimum share price of £20, for example. Seedrs has an interesting onboarding journey, so we can make sure that people who are only willing to take the risk and able to do so are the ones who get in. So provided you have the risk appetite and you have £20, you can own a piece of dozens, which is kind of exactly what we want. Like, you can feel prouder about it and get a nice little investor card, and you can maybe talk to your friends about this new thing that they don't know about yet. So we wanted that growth to come from that almost like little special place in the heart. So Seedrs is as much about that as it's about money itself.
And looking to the future, in the next 5 years, how many users would you like to have?
In the next 5 years?
Yeah.
Oh, that's really hard.
10
That's
million?
really hard. 10 million? Maybe it's like you just got it right, just like that. I don't know. I'd love to have 10 million in the next 5 years.
But do you think UK is maybe the only place you'll go? Or
No,
would you look to
definitely
Asia?
not. I don't know whether it's Asia or not. So, that's an interesting one in terms of if you come back a little bit from 5 years to what do we do next year. The market choice for second market, I think, is not so obvious, because you've got, for example, the logistical side that says, go to Europe, it's right next door. You've got SEPA as a payment rail, connect, and you can get all these countries in one go. But I think we've tried to build a brand which is about service, because I think money is about trust. And if you don't have a phone number and someone doesn't pick up the phone in your language, I think even if you kind of put a tick against that market, you don't really have a tick against that market. And I know from my previous experience that it's really hard to build retail businesses without scale in a market. You bleed a lot of money. So I almost think it's better to go to English-speaking expat locations like Singapore, Australia, US, because expats are also more engaged with money. And with our sort of savings and FX features, we might be better at localizing in those places than in Europe. But it's really not something that we've taken a decision on yet, because we're still pretty focused on making a good go at it in the UK, which is a kind of crowded marketplace, as you know. So we're not unlikely to do something erratic in a hurry.
And you mentioned there crowded markets. There are so many fintechs coming out. Why dozens, and what makes you completely different to the other digital wealth management platforms out there?
I think it's a couple of things. So the focus on individual savings, I think, which comes from us not being afraid of doing financial products. Because I think it's really hard to do to focus on the financial outcome without doing financial product itself. So if you just do this sort of digital layer on top, you end up selling someone else's existing product. How could you change business models if you can't change business models? If I'm going to make money from your overdraft, how could I look you in the eye and say, we're aligned in making you save? So it needs you to do balance sheet innovation. And I think we're kind of like, we say we're the fin in fintech, or we're putting back the fin in fintech. So I think that's one thing that's different. And the second thing that's different is, even for those who are financially engaged as a consumer, you need 5 or 7 different apps, fintech apps or banking apps, to actually see your entire money life, right? Like, you need something for day-to-day spend, a budgeter, maybe some roundup tool, and then investments and pensions and so on. So I think we've tried really hard to make it into one single seamless app. So we go spend, track, save, invest, so that if you were engaged and then you downloaded us and you liked us, then you have your life sorted in one app. And that's taken a lot of effort to get licenses and tech and stuff built the right way. But I think that's the play, and I think that's quite unique. So we probably have a lot of competitors per each of those sections, but not one that I know of which covers all of them together in one app.
So your lifetime customer, if you capture them early on, could be a very long time. 40, 50 years?
Yeah, potentially. Yeah.
So will you start investing in startups, companies? Will dozens users start be able to maybe invest in like crowdfunding companies, entrepreneurs looking to raise? Is that a market you want to go down? More crowdfunding, I guess. Would you ever go down that route?
So I think, every money problem could be put into spend, save, invest, right? There's nothing you can talk about in terms of jobs to be done with money, like buying a house or, investing in a business, starting a business. All of it is somewhere along spend, save, invest. So in that sense, I think our architecture, the information architecture, allows us to do pretty much anything down the line as we want. But I'm conscious that like already with just a current account linked to a savings kind of offering, linked to an investment, an ETF platform, it's already quite hard for people to understand what we do. So if we go too wide or even wider too soon, then I think we have a danger of losing the plot. So we have to be cautious about the timing, but ambition-wise, and that's why I kind of like the Amazon story, because once you're on Amazon Prime, you don't really care whether you're looking for, I don't know, like a bottle of Diet Coke or like your next air conditioner, like whatever the range is, you could find it. And if you can find it with the same service level as you expect from the Amazon Prime sticker, as opposed to being an eBay-like marketplace where you're on your own with the seller, I think that's the model that we want to go after.
And what are some of the challenges Dozens is currently facing? I mean, it sounds like you're obviously onboarding a lot of people.
Yeah.
Is that one of the challenges? Maybe
in a good way, that's one of the challenges, because we've got to get the queue right. The queue, so we're not doing any artificial scarcity stuff. So it's not like, we put you in a queue so that you can see how great Dozens is and how many people want it. We use the queue, one, to get over the card printing, which is the longest step in the process. So we can only print so many cards in one go because of cost, and then we've got to get that right. And right now we've got so much more demand than we anticipated that's proved to be one of our blockers, but we solved that within the next couple of weeks. And once that's gone, then the other role the queue plays is give us a bit of a heads up on the ops side to say this many more people are coming down the line. And I think around 2 to 3 weeks is kind of the right time of heads up, because imagine what happens one way or the other, right? If we hire too many people and customers don't come in, then we're burning money, which is not great. And if we don't hire the right people for ops and service, then we're either risking compliance or risking service, which is not great either. So you've got to almost like have this tightrope walk, and we use the queue to sort of balance that out. So I'd want to get to a place where no one needs to wait for a card for more than a couple of weeks. And I think we're maybe, 3-4 weeks away from that. That would be a good place to be.
And what's the average wait right now?
Average wait right now really depends, because we've got some prioritized buckets. For example, we built up a website wait list in fourth quarter last year. So if you were on the website wait list, then you can kind of jump the queue. And because of Seedrs, because people who want to invest in it sort of want to use the app first, we kind of prioritize that as well. So if you're in neither of those buckets, then you have a longer wait than the other guys. But I think in general, people get in by 4 to 5 weeks at this stage.
But maybe those people you have to wait 5 weeks, do you ever get concerned they'll lose interest after 4 weeks?
Yeah, of course, yeah. But I think, again, we're talking to people about them potentially changing their lifestyles and like the way they look at money and how they interact with it. And I think, yes, it is a bit of a frustration because we're so used to instant gratification now to wait for anything for 4 weeks, let alone like another fintech account. But if people get the message, then I think they'll come back, because I think the offering is unique.
And what's really interesting about you guys is you're trying to make people financially savvy.
Yeah.
But none of this is really being taught in the financial education system. Mm-hmm. How tax, mortgages, pensions. Yep. How can Dozens help the typical 15, 16-year-olds really understand about financial and enterprise education and finances in general?
And it's not even just 15, 16-year-olds. I think it's, a lot of people like my age. Yeah, exactly. Yeah. I think age almost has nothing to do with financial engagement and therefore education. So we do it through a couple of mediums. One is through the app. There's a lot of stuff that's built in. For example, the Savers Awards. We didn't want to do cashback for spending. We wanted to reward good financial behavior. And because we realized the app is quite wide, what we've done is we've kind of put an incentive system in place, or a gamification in place for each tab. So if you're sort of interacting with the spend tab each day, so you spend on your card or you check your balance or you rate your transactions, you can rate your transactions happy, unhappy. So we just want to get people to check what they're spending on, because it's become so easy with contactless and stuff. So if you do that daily, if you stay on your budget weekly, if you save every month, and if you go back to your investments every year to make sure they're on track, that's 4 steps with different time frames. You automatically get nominations for the Savers Awards, and you get into a lucky draw where if you win, you get £100 back in your spend account. And it's a spend account because it is a reward for you being good. So we don't take the high horse and go put it into your save account or something. It's in the spend account, so you should feel good and go blow it up because you were good. So we're trying sort of these subliminal messages through the app. We're not the app that tells you to stop having coffee because you got to retire better in 30 years' time. We just want you to have conversations with yourself. So we do a lot of visual spending and maps and stuff, and the budgeter tells you how much you can spend tomorrow so you don't go out of budget for the month. So we built all of this into the app, which has already had some interesting impact. So for example, my wife is a bit of a habitual saver, But now she's addicted to getting a green bar every day, which wasn't the point of our budgeter, because we wanted people to just have a positive, like a green week every week, not a green day every day. But now she's addicted to getting a green day every day. So it's had some interesting behavior impact, even on someone who was a saver. And apart from that, not through the app, we also are engaging heavily with schools and unis to just go and do talks and stuff, because people want to hear you more when you're a fintech, I guess. So it's proven quite easy to actually get in and start having these conversations. So hopefully over time, using those two mediums, we can make quite a difference. And that's aside from the blogs and stuff that we do anyway.
And for our users who don't know, is there a particular age you have to be to come onto Dozens app?
At this stage, it's 18. We might sort of go down the sort of child accounts and stuff in the future, but at this stage, just for ease of logistics, we've kept it at 18.
And what's the average deposit in the 5% accounts?
So we've only done one bond issuance so far last month, and then this month's going to be a bigger issuance, hopefully. But the last month one was almost £1,500 of average issuance per user. Our save account right now has average balances of £700, £750, and the spend account has 200, 250. So it's very early stats, but it's sort of really good to see, because it's exactly the behavior we would want to see.
And do you think at some point people will start putting £10,000-20,000 into their savings?
Yeah, I mean, the highest amount of the bond, because we build a book for the bond, right? So to incentivize the small savers, but the highest amount that got in last month was £20,000. And the numbers that we had to return, because it was more than the bond issuance amount, was 230 grand and 150 grand. So it's not like people are shying away because it's a new company. I suspect a lot of it was from people who know us, some one way or the other. But even so, people's money is people's money. And I think if you come in and meet the team, because most people are so normal and human, you would end up trusting the brand even more.
And what's really interesting about here, as soon as you come in, you can kind of feel that community culture.
Yeah.
I mean, you're still a small team, but how do you build that community culture as the founder?
Yeah, I mean, I think that's probably the bit that I'm proudest about the team, is the culture bit. I think there are a lot of things that we want to learn and emulate from other startups, but I think we have culture really right now, and I would want to kind of keep it there. So, for example, we don't do CVs still. So we want people to talk to us about who they are and why they want to work here. And it's amazing how much that throws people off. So even if you tell them, don't send us a CV, they will send you a CV, because they're programmed to sort of tell you on one page what they're good at. And then we'll bring you in and we'll do kind of a social interview where people from here will surround you and talk to you, and that throws people off again. So I think somehow the people who make it through that process just fit in perfectly. And it's not like it's a kind of unidimensional culture. It's just people who are open and not afraid to be themselves and have this sort of itch to try and do something cool, who have made it. And we're around 35 people here in London right now. We've got 35 engineers in Ukraine, which is slightly different because they're kind of coding for a specific role. It's different kind of hiring. But the people in London, I'm very proud of the fact that we've kind of got to 35 without going through headhunters and stuff, and still kept culture alive.
Why do you want people with CVs?
Why not CVs?
Yeah.
Because I think a CV is a one-pager written for the sole purpose of selling yourself to that job. And I'm all about aligning incentives, and I don't think that document aligns your incentive with mine. I would much rather check your LinkedIn profile out, because at least there's some kind of social proofing on it, because you're unlikely to make stuff up. But on a CV, like, there's no check, and it's also like, why do I want to know what the third bullet in your 2 jobs before was? I'd much rather just spend 10 minutes face-to-face with you and get much more out of that. So we tend to do sort of open houses on a Friday just to make the process not inefficient. And by meeting people and talking to them, it's amazing how much you can learn that's not them spending hours on bullet points.
Are you looking to hire?
All the time. Yeah.
What kind of people are you looking for?
So we have 2 kinds of hiring. Like, one is people-based. So if you reach out and you have a really strong story about why we appeal to you and what you think you could do for us, we'll definitely call you in. There's only so much of that we can do without sort of affecting burn rates and stuff. So that really depends on how much we like you. And then the other kind, which is increasingly a growing part, is specialist roles that we need to fill as we grow. So payment ops, compliance ops, that kind of stuff, investments, these are things that we're looking for right now. And that balance will keep on moving as we go through customer growth and funding growth.
And looking into the next 18 months, what kind of additional services do you want to launch?
There's stuff like I kind of call it the digital parity bucket, which is joint accounts and child accounts and variables. Maybe like it doesn't change a lot of the proposition, but like is features almost that you need to add to make it a more full offering. The segment that I would want to get into is probably business banking, because I think there's a lot of need for a good business bank, and I know the new brands have kind of done it really well. So there's a lot to learn from, but something simple that lets, for example, individual contractors not worry too much about the business and the individual bit, so that they can see it in one place. Maybe some zero integration, and I also know that a lot of contractors sort of keep their money in their business account rather than the personal account. So a lot of those savings features that we offer might actually appeal to them. So I feel like that's kind of low-hanging fruit, relatively speaking, because we can build on the licenses and the tech we have to offer that. So we might go down that. And we're also, like I said, very financially focused. So there's a lot of not just digital backlog, but financial product backlog that we want to keep on evolving through time, so that you get more on the Dozens platform than you get anywhere else.
And the £3.5 million you're currently raising, which is almost closed, where will that go, and what are you looking to do?
That'll just keep us going for all of these things for the next few months. And then in early stage fintechs, it's all about like the traction you need to show to get to the next funding round, because it's unlikely that we are so profitable that we can pay for like growth as well as salaries and everything else. So it's kind of a game of getting from one step to the next, and you can't dream too small, because then you won't, even if you got the traction, you wouldn't get the growth money, and you can't dream too big, because then you'll burn the money that you have. So it's about striking that balance, and I think 3.5 million, as we've said in the info memo that's out there, will keep us going to the next funding round.
But thinking about big, what is your BHAG, the big, hairy, audacious goal for the next 5 years?
I don't know if it's for the next 5 years, but that circle of money that I described, of individuals saving, businesses borrowing and growing, creating employment, creating individual saving, throw on a bit of helping individuals buy houses, because we know we have aging populations and stuff, and the defined contribution pension schemes are just about to kick in for the first generation. So I don't even think we've scratched the surface of pension issues. So helping people save for retirement, helping people buy houses, helping people save, and then companies growing and creating employment for those people. That cycle of money, I think, will stay for a long time, whether there's crypto or no crypto, or globalization or globalization. So we want to be in the middle of that in a really global way.
Well, doesn't start doing cryptocurrency?
No, absolutely not.
You won't touch it?
No, because I have this like line that the people on the team will often make fun of me for. The least digital progress has been made for the types of money that need the most assistance. And I think crypto is the polar opposite of that. Why do you need crypto right now to be able to buy a house? And I'm not against crypto personally. I just think Dozens doesn't need to get you to round up your coffee spend to go into crypto, because it's a speculative asset. And I would say equally the same for you going and betting on red in the casino, right? So investing is very different from speculating, because you kind of have a risk profile and you have to hedge your exposure, and you kind of buy two stocks or two securities that maybe when one goes up, the other goes down slightly, so that you're never exposed to one trend. And we are all about educating you about long-term buy and hold investments, and crypto is not that. Therefore, given that most people would not understand even what I just said right now, we should not put it on the same app. That's sort of where we're coming from. So helping you go from having an overdraft to first saving £100 to then saving enough to get some returns on the savings, and then saving enough and understanding enough to make some investments so your long-term future is secure, is what Dozens is about. And I can't see crypto fit into that thing yet. And I know it's controversial and many people will probably not like the sound of that, but we're quite clear on it.
You mentioned earlier there about helping young people save for their own house.
Yeah.
I'm not sure what you think, but I think a lot of young people, it's more about the experience, not owning the assets.
Yeah.
Do you think young people can actually ever buy their own house? Especially in big cities like London or Hong Kong, like Singapore, like you said earlier? It's so expensive.
It is expensive, but I think it's not just for young people, and I don't think that's changed over generations. It's harder now because you have this whole idea of sharing economy, and ironically, as it gets harder for banks to make money because of all the regulation and the increased costs, they rely even more on lending, which means young people are even more on the receiving end unknowingly, because of that overdraft issue I spoke about, right? So one thing that gets me about overdrafts that I often talk about is, why is it expressed in 50p per day? If you have £100 overdraft, an agreed overdraft, 50p per day for 365 days is £180 of interest, which is an 180% loan. But I know of plenty of young people and old people who will not break their savings account that pays, 0.5 or 1%, but still going to overdraft at 180% because it says 50p a day. So maybe it's harder for young people, but I don't think it's impossible. And when you think about buying £1 million property in London, I think even 20 years back, you would have had to start a bit smaller and get on the property ladder and get leverage and sort of make sure that you make money on your first house and then go to the second house. And can dozens help you towards getting the savings, to start off for that? I think yes, but it all starts small. The journey of 1,000 miles starts with a small step. So we can definitely get you that small step.
Well, dozens definitely started small, but thinking big, you said I think you want to IPO at some stage?
I said that I wouldn't want to exit to a sale, which implies that our exit would be an IPO, which is a nice picture to dream of.
When do you think we can see that happen? 5 years, 6 years?
I have absolutely no idea. It would totally depend on whether we get to the 10 million that you suggested. At some point we'll be big enough and mature enough to be a public company. Because you have some pretty famous examples in the public sphere right now. Like if you go public too soon without realizing the responsibilities that come with it, that can be pretty crippling as well. So you need to sort of strike the right balance of, yes, we are ready and we're going to stop looking for sort of private investment rounds, so let's go public because we're profitable, we're stable, mature. But equally, the only thing that matters to me is to not be a sellout. And that's easier said than done too, because it's not like this is all my own money. So we've got external money and they've got stakeholders who might want to actually get returns on their investments. And the whole Zuckerberg Facebook story I think is a great inspiration on that, to be able to hold off to $1 billion offer in an early stage company and convince investors that you are still the best person to sort of run this place. I think we'd hopefully go down that line.
And is there one entrepreneur you would love to meet who you still haven't met?
There's plenty actually. There's plenty. I mean, I have the schoolboy crush on Steve Jobs. If it was possible, I would love to meet him just to see what he thought of me, because he was so brash and he'd probably find 15 flaws and I'd love to know what they are. Bezos and Amazon, but it's kind of less interesting because I kind of like Amazon's story better than Bezos himself. But I can't think of any one, but any one of the fellow founders of the Fintechs, I think we would have a great chat if we met.
And have you met people like Tom Blomfield, the Revolut founders?
I've actually met Tom. I'm sure he wouldn't remember, but I met Tom very early days of Monzo. Likewise, with Anne and stuff. We've all come face to face because we're in a pretty small circle. But none of us are I'm not friends with any one of them.
Not yet.
Not yet.
Not yet. And to finish off, what's the one piece of advice you would give to an entrepreneur?
The one piece of advice I'd give before you become an entrepreneur is just make sure you want to do it, because it is bloody hard. It's really hard, and it tests your conviction every day, every hour, and you have to be convinced enough to stay the course, and not just yourself, but inspire a whole lot of people to come in and stay the course with you. So if you're slightly wavering, or if you think you want to do it because of short-term goals and incentives, then it's absolutely not the best way to do it. There's plenty of jobs that'll kind of be entrepreneurs that is probably better off if you're not sure yet about the idea. So it's probably more about doing the thinking before taking the jump, rather than what you need to do when you're in, because once you're in, just go with the flow. And
for founders who are in a similar position to you, who are trying to scale their company, what advice would you give to them?
None, because I haven't done it yet. So once I've scaled successfully, I might have some words of advice for them.
I guess just have fun, have a laugh, and keep going.
Yeah, that's important, irrespective of what stage you're in. I think at whatever point you stop doing that, I think you should do something else.
Awesome. Well, before we finish as well, how can our audience hear about you?
We're on dozens.com. We have a Facebook page. You can, of course, download the app, which is what we would love you to do. If you're a UK resident, it takes 2 minutes to get the account. And I'm pretty active myself in the community as well, so it's vr.dozens.com. So if you have more questions or comments or suggestions, just show up there.
Awesome, Wasey. Thanks so much for your time and good luck.
Not at all. Thank you very much.
So another really interesting fintech story. It'll be interesting to see where Dozens goes in the next 5 years. Can they reach that 10 million user target? We will see. But like I mentioned to you at the start of the show, AZ has very kindly agreed to come and do a talk for us on October the 1st. So if you would like to attend, we would love to see you there. Please head over to makersseed.com, head over to the events page, and for the first 100 people who purchase their tickets, enter code podcast for a 30% discount. This is only for the first 100 people, so once the tickets are gone, they are gone. We would love to see you there. So until the next episode, good luck and have a laugh.